Hey everyone, my name's Andy. I'm from Finding Value Finance. I'll be your host today. We've got Uselink or Kasper with us. We bring them on every couple of weeks, maybe once a month or so.
Yeah, yeah, roughly.
Uh, get your opinions, get your charting up in front of us, see what you see. Hopefully, it's similar to what I see. So thanks for coming on. Really appreciate it.
Yeah, thank you very much. And yeah, every month we have a talk, and it's always a pleasure. So
All right, so we brought you on to look at some charts. I think we were talking a little bit earlier about some ratio charts, seeing what's going on, getting some updates. So I'll let you kind of start where you want to start, and we'll just kind of go from there. What do you think's the most important thing going on right now, and what are you seeing in the charts?
yeah, good question. As always, I think one of the very important factors that is happening now is actually gold miners breaking out against gold. We have a 15-year breakout with a bottom structure in place, also breaking out. So this is very early, but again, these very long decade macro breakouts, they mean something. And I think should we just share the screen, I guess. Let's do
Let's
that.
go right into it. Let's see what you got.
Yeah, cool. So here it is. Let me know if you if you can see it.
Yep, it's up.
Yeah. So it's basically pretty simple, right? Sometimes one trend line says it all. And again, here, this is the 2008. Remember, this is gold miners divided by gold. So you're basically looking at, is it better to be in gold or in miners? And basically, ever since the highs here, gold has been doing really well, better than miners. But that is changing as we speak here because we are breaking out on a monthly candlestick right here, right now. So gold miners is now setting to outperform gold. And that will be in a period where gold will do well, but miners will do better. So if you have been doing really well, for the past year, ever since gold broke out, then again, a rotation is coming now, and they're going into the bit more risky assets, but they are also setting to outperform. So that is one clear chart that I'm really have been waiting for quite a while. And once we started to break the white horizontal and the downtrend, I mean, if we close the month here, it's still pretty early, but then it's definitely a confirmation. And gold miners, also, if you look at the big gold miners, if you take the top 10 in the entire world, they look incredibly good. If you look at it from a very long-term perspective,
Yeah,
they look
do you
insane.
have one that you could pull up maybe to
Yeah,
show us like what
I
just
do.
just
I
one
do.
or two
Yeah.
just to give an
Uh,
example
I
of
will
what we're
take the
seeing?
biggest one. It's a Chinese, but still, I think it gets the overall idea of uh, of the situation, right? Now we are on the 3 monthly, so 1 quarter is one candle, so four is a year. Uh, but again, this is the highs from 2010. Then we have 20, and now we're breaking that high. So we have a 15-year breakout. And this one has, again, it's now at roughly 33 here. I have targets close to 100, basically, for this big player here. And it is by far the biggest one. It's 140 billion with a B. So it's a massive company. Um, but you also have AEM, for instance, AEM here, which is, again, just look at that. Again, it broke out here in 2025. But again, long term, it looks really healthy. And you are at a stage where if you are in the 3 monthly now, you should go down to the weekly even to look for the entry if you don't have an entry. Again, don't buy here now, but again, any pullback should be bought because we are in such a big uptrend on these big players here.
I'm in the camp that these big guys break out first, and then the smaller mid caps, and then maybe the small juniors are all going to follow behind it. Do you think it's going to go in that order?
Yeah, typically, and that's also what we have been seeing. I think, ever since gold broke out a year ago, these big players, again, this was when gold broke out above 2075, that was at 60. Now we are basically over a double. So they have been front running. And yes, it will trickle down and you will get that rotation. But for any sector, basically, it could be gold, silver, uranium. Just look at Cameco, right? They have it has outperformed massively compared to basically everything. So always, well, more or less always, you have the metal, then the blue chips, and then it tickles down to the mid caps, and then at the end of it all, you have the crappy companies getting bought up as well. So
Yeah. What other ratios within, say, gold or silver or whatever that you're looking at are screaming that this is going to be a game changer?
yeah, I mean, we could do again. This is the gold juniors. They broke out a bit more messy compared to the majors, which makes sense because the small guys are more erratic. They're a bit more, well, no, all over the place. So when they get sold, they're getting sold big. But also, it looks really healthy, breaking the downtrends from 2010 here. And I have still roughly 30% until we see any bigger resistances coming in for the juniors when you measure it in inflation terms. Silver, again, still we could do this one here. This is the major silver, guys. And similarly, we have had the 2011 highs, which is an important high because that was the peak 15 years ago. And then we have the big peak in 2020, which everyone remembers. So these two are two important peaks, and we have been breaking that as well. Um, and also, we are forming what I like to call the bread and butter setup, which is like a big fractal wedge. And we could tag it here for the third time. And when you break there, there is no question that silver miners is outperforming inflation on a long-term time scale. And you can actually call silver miners, even though it sounds insane, that at that point it's an inflation hedge, um, which sounds insane to combine with silver miners and inflation hedge, right? Very rarely do you get that connection, but yeah, we're getting close. Um,
What about so do you think very soon the silver guys are going to start to outperform gold mining companies? So silver miners are going to outperform gold miners.
we can check. I haven't been looking at that ratio for quite a while, so we take the majors and see.
Mhm.
Um, a bit messy, yeah. But as you can see, they are at the lows, and I will say until we start to clear basically these highs here. So we still, again, silver miners are underperforming, and we need to at least do like 20% or 10% here in order to get to a place where you could see the outperformance. So
So
there's still
if
some way to go.
if you had a option to choose between gold miners and silver miners at this point right now, what would you choose?
I would choose silver miners, even though we haven't been breaking out. But
Mhm.
I would be overweight silver miners given the fact that gold has really run its course and that we're seeing potentially technical breakdowns in the gold and silver ratio, which means silver itself will take over, and that should fuel more for the silver miners. But keep in mind, they are way more volatile compared to gold. So again, it depends on your personality, but I think that there are more options in the silver space at this
Would you
moment. So
do the silver larger companies or would you do the silver juniors?
I would do a mix. I would also take like one or two, like a lottery ticket, very small cap, maybe 20 million. If it has a good setup, you buy and you basically see what happens. If it goes to zero, it is what it is. But again, you can also get, the 10, 20, whatever bag you're looking for within those small companies. But again, you're taking on more risk because they can easily dilute quickly. They can do a lot of stuff. And if you get a pullback in silver, let's say 20%, it will get smoked 50 or 60% easily, right? So it is again two sides to the coin, really. But I would mix it around and maybe do like 50% majors, whatever, 30, 40%, mid cap juniors, and then take one or two uh, crappy companies, but very small cap companies with a good setup, and then you see where it takes you. That could be a way to go. But don't forget to again to be involved in gold itself also. It's a good stabilizer to have.
Yeah, I tend to go like Jekyll Hyde. I'll do like a ton of physical metal and then I'll do like the smaller companies. I
Yeah,
kind
yeah,
of
yeah, exactly.
skip the middle, the big guys, just because I don't think they're gonna have the torque. It's like if
Yeah,
I'm gonna take risk, I wanna push the leverage.
yeah.
That's what I do. Doesn't mean it's right.
No, I mean one candidate. This is a big one. It's a 6 billion,
Yep.
so it's not the 140 billion, no, because that is just by far the biggest. But Coa Mining here, CDE, what a setup that is, right? That is absolutely fantastic. And we issued the buy signal this May here at roughly $8, and now we're getting yet another one north of 10 here. The first signal was the downtrend break, 30, 40 years, and also now you have the wedge, the big macro wedge to take you in. So CDE here is a good large cap company in my view to actually get involved with and again this is a 40-year breakout roughly. So you can easily sit in this for there is a rule like the seventh of the breakout. So you're talking what, 5 years, whatever. You can actually be sitting quite neatly and just let it do its thing.
Yeah, it does look pretty good. We've
Yeah,
we've talked about that one too, CDE, and there's some other ones too that have broken out and really run like on vertical
yeah, exactly.
of the
Yeah,
larger companies.
yeah.
Yeah, I see
I
you've
mean,
got Hecla there. That's got the longest downtrend of, and
yeah,
when
going
that
back
breaks, it's gonna rip.
half a century, right? And there are just like a bazillion resistances here. But I think anywhere between 7 and maybe 10, maybe between 7 and 9, that's when you have broken them all and you're going to run. Um, so it has a lot to get through, but I'm positive that we're going to get there.
Well, it looks
And
like it's up a lot pre-market. Is that pre-market that you have on the bottom there?
yeah, that's at 10%. I think there were some earnings with the CDE here, so it might, drag everything up. But yeah, between 7 and like $9. I mean, this one is gonna go big time. If you want to be early, I
Yeah,
would do
yeah.
7.7. But again, that is micromanaging. Once we get to 2 digits for sure, then there is no um, reason not to be bullish on Hecla Mining after 50 years of pain, right? Basically.
Well, if
So
if that breaks out, I think we're gonna see just a monster run. I mean, it's gonna
yeah,
be big, big.
yeah, it does.
It's gonna be like the
It's gonna be.
biggest set. Yeah, I mean, it's gonna go. I mean, you could see that go, I don't even know, 40, 50, 60, 70, 80. I mean, it could just go.
Yeah, it could, and also just again looking at the GDX here. Unfortunately,
Mhm,
we don't have, data going back before the highs of 2011, right? I wish we had the run up from 2000 so we can do some measured moves. But again,
mhm.
here, uh, back in, early 2025, you can see here, massive breakout, deep back test, rally. There's a lot more to come, really, from a long-term perspective. Short term, it will be volatile as heck. Excuse me for cursing a little bit, but it will be again from big. You have to have some pain in order to get the big gains, I guess.
Yeah, I would say gold and silver. I mean, they look like they are good and have gained some momentum, which
Yeah,
is it's an easier trade, I think, for a lot of people at this time because they're coming off bottoms and GDX. I mean, that's already flying. So
yeah, it is. It is. And either way, you measure basically against inflation and or the metal or the ETFs themselves. I mean, it looks pretty darn good across the board.
and then what about a gold to silver ratio? I know that you spoke about it earlier. Any
Yeah, we
any
can.
progress there with
It's
silver?
yeah, it is actually. Again, it's a bit more messy this chart here. But my take was that again we had the whole tariff situation here, and I also said anything north of like 90 to 92 is extremely bad, and that is when you saw that big spike, all markets basically tanked, um, and now we're back below, and we have back tested that 90 to 92 zone, and hopefully rolling over, and that is again a bit more short term, managing, but long term. Again, this to me here looks like a massive down move, and now we're just going to go sideways. And at some point in time, we will get that third touch, fourth touch, we break down, and then you will see the mining sector as a whole do things that rarely get to see, because this is my indicator for when the mining sector really runs. Because when this ratio comes down, that's when you have every single checkbox that you could possibly imagine, and looking at it very long term, we're still very high, right? we are at 90. And yeah, I think, within like a year or two, we could easily be at 60. And why is that important? We have the 2016 here, and you can basically see we do have some sort of, it's a bit skewed. You won't find this in the textbook, but it's definitely like a big topping coming in. And then again, you can do the measure. So again, I wouldn't, again, like we talked about earlier as well, I think we are at least gonna see 30 when this whole thing is over. And I'm also in the camp that we're gonna see way lower. Obviously not tomorrow, but looking into 2030 or whatever, I think that's gonna be, I wouldn't say piece of cake, but it will be numbers that we are gonna reach for multiple reasons, right? The bond market is broken. Where do you go to safety, or where do you buy an asset that is holding up its value and people still want? You only have gold, basically,
Similar setup.
and
It looked like
silver.
it was 2008, way back there, where it spiked and then
Yeah,
did that same fractal. Yeah.
yeah, exactly. This is the 2008, right? And this is the COVID
Yeah. Yeah. That
madness.
big move.
And then
Yep.
you had that somewhat
Yep.
same vibe-ish, right? And you have the
Yep.
flag here. So the vibes are the same. And you can see once we really started to break down, I mean, you ran from 60 to basically 30. So you got cut in half in half a year, right? So if we do the same from like 80, we go to 40, within basically, we could do that within a year if we get the break here somewhat soon, or at least early 2027.
Yep.
So, but right now it's a lot of noise, no real direction per se. It's again, we're stuck in that flag, so the day-to-day basis don't put too much into it.
I think silver is going to outperform here versus gold, just based off the big cup and handle and where we're
Yeah,
located.
yeah,
I think we're going to do it here sooner than later.
yeah.
That would be
I
my
also want to
guess.
show you one. I want to show you something here which we didn't have on the schedule, but it's this one here. We have gold on a very, very long-term time frame, right? So gold there back in early 2024 broke out massively. And that's an understatement against inflation, right? This is the peak from 1980s, 2011, 2020, we broke on the fourth. Target is roughly 50, right? We broke out at 7 and we have a 50 ratio target for gold to outperform inflation. And if we now do silver, you can just see how well it basically tracks the gold divided by inflation ratio. I'm just going to do this one quickly on the fly, and you can see, right, similar vibes like that. And then we drag this up here. So this is the silver chart, as you know, and this is the gold one. And gold has broken out from the long-term stuff, but also silver has breaking out from the midterm. And yeah, the cup and handle, right? So it's yeah, silver is setting for a long-term outperformance on gold. Um, that's also my view.
Yeah, this is going to get crazy here at some point. Things
Yeah,
are just going to keep going, 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 and going. Even in the mining companies.
yeah, it is. It is.
So,
If you overlay like GDX divided by the silver to gold ratio, you can find
mhm.
not a perfect one, but a very high correlation. So the higher we go, it will drag the mining sector up as well. So that is why it is so important, that ratio.
Here's the all important question here. How are you position sizing these sectors? Like what percent allocation? Because I mean they look ridiculously good, and position sizing and allocation is a big deal of playing these correctly. And I know you're in other sectors too, but how like what position size are you putting on or allocation?
Yeah, for that I use ratios. And again, right now we're in like a bit of a dry spell. If again, I'm very much into what's it called? Uranium,
Uranium?
that. So if we just divide here the two big players within uranium and silver, you can see that Cameco has been clearly since the COVID lows outperforming. But right now we're stuck here, right? So anything in between, you're roughly getting equal gains and equal drawdowns. If we break to the upside, again, Cameco will outperform First Majestic, which could be a sign that uranium will do better. But again, if this is a top and you're going to come down, then silver will be a place to allocate more into. even though it means that both will go up. But again, First Majestic will do more. So,
Well, what about if you did CCJ versus CDE
oh, that's a good one.
just to take a
That
different
I haven't checked that one ever, so that is quite nice. Not surprised, the outperformance still. Oh yeah, it's very clear to me actually. Um, there it is. So you can see
yeah,
again
Cameco.
30 years of
Yep.
outperformance by Cameco. Of course, when you have CDE coming down so much, but I think one below roughly 5.5 here, it's very easy to spot that topping pattern. And you would also be losing the previous all-time high basically if you did that. So anything low 5.5, and to me it says that CDE will be the better play than Cameco by far, because that would trigger a big outperformance, down to roughly 1.5 down here. Um, so
Yeah, we're
so yeah,
we're in a weird situation right now, I think. I mean, because in order for that to occur, I would say that we need a slowdown in the market. We need a weaker dollar, slowdown, lowering of interest rates, and that could all come. So,
yeah,
yeah, I don't know.
but but I
But
think all that stuff. Yeah,
we could also be like racing each other here too.
yeah. I mean, don't get me
Because
wrong.
like
This looks like Cameco will do bad things, but I think Cameco will actually do well in that period. It just means that, CDE will do better. So, because
well,
rarely do you have, yeah,
what if that's a retest of the breakout?
yeah, yeah, exactly. And until you clear below 5.5 roughly, it's
Right.
still, um, a retest, but with vibes of topping out, right? And and when do we look for to actually become, again, I will say above the highs here of the potential shoulder, then it starts to say, Cameco is a better one again, and we haven't seen the breakdown. So it's until then, I would say Cameco is the better play, and we confirm before below 5.5 roughly.
Yeah, well, I mean, like when I look at like something like URA, I think that URA, the chart itself, looks ridiculously good.
It
And
does.
then you look at SPUT too, U.UN, that's broken out of its flag to the upside. So it makes me think that Cameco can still go up.
Yeah, it can. But
Um,
again, if we break down
what
in that ratio, and that's why I'm trying to again say here is I mean, Cameco can and will most likely go up, and that's the insane part, right? But you will have a big player like CD doing better, so both will do well again. But the ratio is coming down in favor of the gold of CDE. So so yeah, but yeah, again, this is let's just remove all the stuff here. This is URA. Again, I wish we had more data, but again,
that
just
looks
looking at it
ridiculous.
here, the last quarterly candle, yeah, we talked about it last time as well. That is incredible, to say the least, right? That is absolutely, um, yeah. I think you have a monthly Bollinger Band expansion here. Do we have quarterly? To some degree, but still, it looks really good. And that was the whole tariff, sell-off. And a lot of people sold, not only in uranium, but in gold and in tech, all that good stuff. They sold only to see it, being higher 3 months later. So yeah,
That looks ridiculous to me. Like
yeah,
that looks ready to go.
it
Like,
does. Yeah.
what about SPUT? Because that broke out too, didn't it?
Yeah, we
Oh,
can
you
do
can
spot.
go over this first, but
Yeah. This is my favorite ratio in the uranium sector. And this was also what kept me sane during 2024 when you had a big, big, big sell-off in URA. But to me, this was like the spring building up here. You can see this is 2024, and you can actually see that the last 10 years is basically one big Vikov accumulation phase, and we're about to do some, again, as long as this holds true, we're about to see some absolutely ridiculous outperformances by URA in relation to the metal. Again, it doesn't mean that the metal will go down because it won't. It will probably go up. Otherwise, you will not have outperformance by miners. It just means that we could be in for a period here with 100, 200% outperformance by URA compared to the metal, which is going up meanwhile. So remember,
yeah,
it's
I
long-term
think
stuff we're looking at. Long-term stuff, not day-to-day basis. Long-term stuff here. So
yeah,
two, 3 years.
I think URA or URNM or URNJ, I think they're gonna light it up here at some point. I mean light it up. We're gonna
Yeah.
see exactly what we saw last bull market. It might take a little bit of time before we, I mean, really go, but I'm getting pretty bullish on, silver too. So like
Hmm.
that, I mean, that's the question. It's like when you weight this stuff, I look at it, URA looks ridiculously good. SILJ is low and starting to still come up.
Yeah,
And it's just like everything
yeah,
looks good to me.
yeah. And you don't really have like a clear direction, I think, between those two for now. Kind of like, stuck within a previous range, you can call it that, with that being the midpoint. So no clear direction per se, but at least looking at the monthly candlesticks. Uh, but at some point in time, you're gonna, of course, see that one break or that one break, and then you can uh, get an idea of which one is doing better. So
So allocation wise, I'm going to go back. Uh, how are you allocated to these? If you'd like to share, not
yeah, I,
like the companies, just percentage wise. Are you favoring silver? Are you favoring uranium?
I'm favoring, if my memory serves me well. I'm getting older, so that might be a bit incorrect here, but I have been more heavily uranium, as you know, for the past until recently. But now I'm a bit more overweight into the silver and gold space. Still, in dollar terms, heavily invested into both, but it has skewed a little bit over to the silver and gold side. So yeah, that's where I stand on this. But I think both again looks good, and they're gonna go up. So
Yeah, I wouldn't say I'm similar. I made a lot in the oil space, so that's my
yeah,
largest
hmm,
allocation. And then uranium has fallen over time just because of the speculative nature of uranium. I kind of just let it go, but I've added to a lot of the silver junior stuff. I'd say a past year or two,
yeah, yeah,
which has gone up a lot, which now it's starting to go up in allocation percentage too. So
yeah.
yep, that's the split or whatever.
Yeah, that's the spot. I think we could do spot here and then the spot price also, because we had the breakout from the 1 year bull flag, very exciting. And then we had some deep back testing going on here, but I think it's still a part of actually a bit of a head and shoulder coming on there. And we're now peaking back above the main bull flag, which is good, nice to see. Um, so yeah, overall, again, the uptrend, which you can pick whichever you want, the blue or the yellow, basically. They are pointing up, even though we are below the yellow, but the bigger one is still intact. And if we can clear the neckline here and get back in above the blue, let's say roughly $30, then again, you're pointing to higher prices.
Yeah, that looks really good.
Yeah. And similarly, again, looks kind of like the same. You have the spot price breaking out from the main flag, back testing, gap fill now at roughly 70. So hopefully this is a textbook flag breakout. We back test and then you go. Right. That is
I
the
think it
view at
is
this moment. Yeah. So
because the equities are taking off already. So I think
yeah.
it is.
Yeah, exactly. Again, you wouldn't see the equities. Again, nothing is certain, but again, you wouldn't see the equities take off and you would see that one go down there. It doesn't make any sense because the high leverage is miners, right? So if you have a tanking spot price, whether it be gold, silver, uranium, you will, again, more often, you will probably never see a raging bull market in miners. If you have the metal come down, it doesn't make a lot of sense. So yeah.
Right. Yeah, that looks pretty good. So we've gone over gold and silver. We've gone over uranium to some degree. What about we finish it off with like platinum,
Oh,
maybe,
we can do
or
platinum.
copper? Yeah, we could do copper. Let's do
Yeah, again,
copper.
this is also a funky ratio, right? You have copper miners against inflation. And I like it because it's very precise, within the chart. You had a big double bottom here. This is 2016, and then you have the bottom there in 2020. Midpoint, and now you're basically wedging up around that midpoint, the midpoint of the double bottom. And I think this is a perfect example of later on, in 2026 maybe, you will get the breakout from that flag or wedge, you can call it whatever you want, then you're going to go more to the upside. Then you will have copper miners also outperforming inflation and actually being a hedge for a few years also. So interesting.
Yeah, copper out in the future, we're seeing some pretty large deficits of demand versus supply, and they're coming right now. I mean, we're like right at that inflection point over the year or two
Yeah.
of things really taking off.
What is your take? Because all of a sudden we had a 20% drop, right? I didn't look at the screens, but when I came back after the close, I'm like, what the hell happened? Did a nuke blow or whatever? But it was basically FOMC slash US government talking about, rates. And then all of a sudden you get a 20% drop. That is strange. To me, it's very strange to have such a drop, right? But
Yeah, I don't the tariffs crap. Yeah, it probably ran up a little bit thinking that we need to bring more copper in because of tariffs, but then they eliminated the tariffs on certain copper products,
oh,
so it
okay.
dropped. But I don't think that matters from a long-term perspective. The copper's still going to squeeze like heck, and I have
Hmm.
no idea how they're going to fix the supply demand deficit in any short period of time. Like I think we go into deficit maybe probably within a year or two, somewhere 2026, something like that, maybe 2027 at the latest. And then I don't think we ever go back down. Like I think we're just going to have to squeeze demand out of like basically distribute copper whoever can pay for it. I mean, that's
Yeah.
like I don't think the supply is coming on in any sort of great quantity out in the late 2020s, early 2030s.
Yeah. Yeah, as you mentioned, demand is ramping up heavily, and we're basically getting zero, well, not zero, but we're basically getting zero supply online, right? Because it takes like a quarter of a century to actually build a mine and get it going. So yeah, I completely agree. Long term, copper looks good. But of course, that 20% drop in like 10 minutes, again, it just shows you how leveraged everything is. It makes no sense, right? It will take some time to unwind the momentum because you have algos and people trading short term and all that stuff. But yeah, copper, metals in general looks really, really good.
Yeah, I see you got platinum up there.
Yeah, your boy Platinum. We talked about that last time. And remember, at least personally, I said 1050 was the big moment. And again, this is just technical, you know, break out the back test, and then you boom, you rally. And whatever happens short term, this stuff here, just it doesn't matter. Just lose your, the password to your trading account and let it run because this has multiple legs to it. So yeah, targets we have just met one, which is the inverted head and shoulder. It's right here, right? That's the inverted head and shoulder, and target was basically hit right there. So you're getting the first pullback, but there are more to come and eventually higher, right? But that is, again, it sounds a bit hyperbole, but this is one of those breakouts. It doesn't matter if it's platinum or if it's crypto or whatever. It's one of those charts where you definitely want to be involved because this is such a long time breakout and you're still so early. Um, it's ridiculous. So yeah, platinum looks good. And whatever happens here on the daily chart, who cares, basically.
Yeah, going with the long-term approach. I like it. Yeah, I
Yeah,
think
yeah, yeah, yeah.
platinum and silver are my two high conviction physical plays.
Yeah.
From
And,
ratios perspective
and-
and stuff
yeah,
like that. I think they're both just going to crush.
yeah.
So
And also one thing here, and that's why I like to turn on the Bollinger Bands every now and then, because here we have a place where you're getting a monthly Bollinger Band expansion and you hook the upper limit. And we're talking monthly. And so if you get a contraction and then you break to the upside, it means that the period before that has to be very, very long and very, very tight, building up momentum. And you can basically see here we were between 1,200 and 800 at the lowest point. But we squeezed up for basically 4 years. And now you're hucking monthly Bollinger Bands to the upside. Uh, I'm very happy if I can find like a weekly Bollinger Band expansion because these are like I call bread and butter. But a monthly, again, you have 22 trading days within a candle. So again, the daily stuff is noise. Even the weekly stuff might be, I wouldn't say noise, but that is where you look. So every week you can look at it on Friday, and then you see where it is. This should have a lot more to come, given the expansion of the volatility. So
So when you say the Bollinger Band, obviously Bollinger Band's a squeeze up into that corner there, and then you hug the upper end when it breaks out. What
yeah,
exactly does that mean? What does that mean to you when that does
it
that?
means again if it then you're looking at the time frame, in this case, the monthly. So I like to say when you get such a setup where you get that pure expansion, it means that the monthly time frame are in charge, right? It's the monthly candlesticks that is dictating. And anything that happens below that, again, you don't really care because that is just, small dips, small consolidations and stuff like that. So you basically don't care because the long-term time frame in this case is so much stronger than the short term because you're hawking that upper Bollinger Band. So that is again my go-to setup, and I will even show you a stock that did similar and which we bought
Okay.
heavily into because I think it's such an easy. Nothing is easy. It's an easy way to grasp an entry, and basically you can basically buy 10 stocks per year if you can find these setups in the long term and actually be quite happy with the results, right? So this was just I'm going to go to the monthly again. Again, this was also similarly, you had that contraction, and then you started to hook upper Bollinger Bands again on the monthly time frame, and you just let it run. You don't really do much, and you rarely get these contractions. And similarly, also a stock. Again, now we're talking stocks, I know, but also a stock that I bought heavily into. This is a weekly Bollinger Band expansion that I like very, very much. And you can see it here again, you started to expand, and actually we just went higher. Monthly as well, we expanded, and we haven't really been looking down. Yes, we have, but overall it's healthy, and we're getting even re-expansion now on Opera Silver. So when you can get these, you can just sit tight and do nothing, basically,
Yeah,
for a long time.
there's a whole bunch of those that setup that you're showing right there. There's a whole bunch of those in other metals at this exact moment, and they're right at
Yeah,
the tip of the corners.
yeah, exactly, exactly. I mean, I like to say,
Like
we
there's
have
a
like a 1, 2, 3 year wedge. If you don't want to trade every single day or every week, if you had that wedge and you get the Bollinger Band in the middle, and again, there's more to it, but these are just, I love those, and I'm taking them every day of the week if I can find them. So this was a prime example. Entered at roughly $2 and haven't done anything, even though we have had big pullbacks. Of course, we have, right? 40%. It is commodities after all. But the overall nature of such a setup is to do nothing for a long time.
yeah, that's a nice little uptrend now, and it's gonna go for a long time.
Yeah, yeah, it is. I mean, I have some very insane targets. And again, if
Yep,
I get that, I don't know, but I think
it's gonna
roughly
go for a
40,
long
$50.
time.
I mean, 40, $50 and you enter at two. It's going to be, again, we're going to see a big downtrend, short-term pullbacks and consolidations and all that. But again, if we get to the target, which is basically my channel here, what a trade, right? $2 to 40, maybe.
Yep.
Yeah, it's
Playing the big picture view, that's good. It's
yeah,
good.
yeah, exactly. That's something that I've done more and more weekly. The weekly time frame, I think, is my way to go, and then you go down to the daily and or the 2 hourly to snipe the entry, basically. So
We got
so
silver
yeah,
there.
yeah, just looking at silver. And you basically had similar stuff here, even though you had a bigger pullback. But again, you get the idea. Once you get these big contractions within a wedge, that's typically a very good sign. So a massive rally, back test, on you go. So and you can see it over here also back in 2003, right? You have the red wedge and you break the Bollinger Band and you just ride it. Oh wait, yikes, and then you go. So yeah, I really like that setup, and it's one that I've been using for many years.
Yep. Yeah, that looks really good. Everything looks
Yeah,
really good to me. I mean, I pull up anything and I'm like in commodities, and I'm like, that looks good, that looks good, that looks good, that looks good. And then it becomes a portfolio allocation problem because
yeah,
you're like, well,
yeah,
how
it
much should I
does.
put to this and how much should I put to that? Should I add another company that has this big squeeze going on? Yeah.
Exactly, yeah, exactly, yeah. So yeah, I mean, it does look, many things looks good. It really does. Um, But
So
I'm also but I'm
we
also in the camp, that we're probably not now, but again, that's always difficult to predict. But we're gonna see some heavy stuff to the downside, uh, you know, just around the corner. Because things, even though the charts look good, economy and all that, it's basically, uh, you know, it's not the best. I think yeah, but we shall
Yeah, I
see.
also think that if we do get that, I think they're going to print a bunch of money.
Exactly, exactly. And
So
where do you want to be? You want to be in silver and gold, basically, and of course platinum. But they will react heavily to such a, and oil also to such a an
silver,
event.
we could see it go up, 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 get a sharp pullback, and then just a launch. Very similar to 2020, very similar to 2008.
Yeah,
Yeah.
yeah. I think we should
And then
end
silver
here
will just,
with yeah,
rocket.
yeah. I just want to show you before again. This is again platinum. I like this ratio. I really, really do.
Mhm.
Not a ratio, but a comparison between the two. So this is platinum, which we know, just looking at it before, looks, I mean, that is gone and just it want to go higher, right? And then you have, if I can do it correctly here, excuse me. And then you have oil on top, right? Basically, and you can just clearly see how, again, how correlated these things are, right? Big puke
Mhm.
there, high there, and then you have a break on platinum. So again, in my view, if this is true, which I'm very, very confident in, we should see a similar move here for oil. Could we get a, yeah, sure, but overall they track each other so well. And if platinum is leading, right, then let's expect the same
It
from oil. So,
platinum it platinum led in the last bull market.
hmm.
If you do PL1 instead of you writing platinum, so if you do PL1, I think it'll give you the extra data.
Oh yeah, okay, cool.
Yep.
Yeah, yeah, I can, yeah, yeah, I see what you're doing. So,
Yeah, the last bull market when it squeezed up, it broke out.
yeah. So big
Yep.
breakout backtest here, right?
Yep.
Similarly. So
Yep.
yeah, I mean the correlation, if you were to do like a calculated, I would say, it's like 0.8, and where one is 100%, I would say 0.7, 0.8, which is very high, right? Which is actually very, very high. So
Yeah, this looks good. And I agree with you. I think oil's it'll rip. It's coming.
yeah, I think it's getting
So
managed
basically,
somehow now. Yeah, it's getting managed by the big people because again, if oil goes, inflation will be through the roof in 18 months. So yeah,
yeah, I don't think Trump's going to be able to stop this thing.
no, 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 no.
And who talks oil down, tries to, but
Yeah, exactly, exactly.
it's coming.
Yeah.
So yeah, what I usually do is when I see these things start to break out, I go look at the lagging sectors, and then I go look at all the companies and the laggers and see what's bottoming and really low, and go pick them all up. And so that's what we've been
Yeah,
doing with oil
yeah, yeah, yeah.
because
It's
this correlation exists.
exactly, yeah,
Yep.
exactly. So yeah, that was just a side note. I think it's
Ooh, your boy Rhodium.
yeah, yeah. No one is talking rhodium, but I said anything north of $600, and we're gonna see 1,000 with overperformance. It looks really, really good, and we're about to make, take out, basically make a new higher high in a long time. Rhodium looks incredible, and again, we can do some long-term Fibonacci's as well. I mean, it's
It's
yeah.
gonna be too big.
Yeah, exactly. And also the alignment here with the 0.618 just above all-time high. If you see that, that's a very good indicator that we will gain some good momentum. Because if it's below there, that means that the pullback has been I mean, it
Too
has gone
big.
too far down compared to what you would normally see. So I like Rhodium here insanely much.
Yeah, but I mean, if if rhodium reaches like I usually say 2.618, that's what I think most are going to hit.
Oh yeah, the max extreme, yeah.
But
It's but this is a
what's the
large scale, so
valuation up there? That's
yeah.
ridiculous, right?
Yeah, I would just say the 100% measure is a good guide, to that somewhere, not tomorrow, of course, but again, we'll probably peak somewhere around there if this really gets the move going. That's 15,000, plus minus many thousands. But yeah, so it's yeah, I think Rodin looks really good. and that's an understatement. And no one is talking about it, so that's good also.
Yeah, it's hard to play it directly though.
Yeah, yeah,
It's the only downside
yeah, yeah.
outside
And
of the
remember, by the way,
equities.
this the price is here 600. You have to multiply by 10 to get the real price, so it's actually 6,000 now, meaning this would be 140, whatever that is. So it's yeah, if we
That's
get there, of
crazy.
course, within 5 years, but still, yeah.
Yeah,
So
and
yeah,
palladium looks like it's rolling higher too. So the whole group,
mm,
rhodium, palladium, and platinum, they're all going to go up together.
yeah.
Means the equities that so nicely positioned in are going to go way up.
Yeah, we also bought it big time when platinum broke. I mean, we had 10
Yeah.
stocks we looked at, and I think basically 9 out of 10 broke, just around that, and they are up 100%, maybe 200. I mean, they are doing really well. It's been volatile, yeah, but that was a big break as well for miners, so that is really good to see.
Yeah, we can. Do you have anything else that you'd like to share? Or anything else that you're seeing
No, I
out
think
there?
one more thing again before we cut it
Mhm.
off here, and that is I hear many people saying that platinum, palladium, and rhodium won't go up because the use case, they're used in diesel and petrol. But again, it doesn't matter because you can have demand go down 50%, but if supply goes down 70%, you're going to have a massive. I mean, it's all about supply and demand, and if that ratio goes in favor of demand, I mean that's the equation. So it doesn't matter what I mean how much is going to be used and all that. If the price goes up, it means you have a supply and demand problem. So yeah, that's just again, it doesn't matter what people are saying. In my view, that hey, we're going to lose 50% of platinum demand. Yeah, but what if the supply goes down 80? I mean, it's and it's getting produced in Russia. If they cut off tomorrow, and the other half is in South America or whatever. I mean, it's not the best places to mine, and political and governments. It's not the most stable. So yeah, that's just yeah my take on that
Yeah,
thought.
there's a
I think
ton
it's
of
very
upside.
wrong.
There's a ton of upside if something were to happen in either one of those two countries, South Africa or Russia. Yeah, I mean it's and Russia, they produce, I think it's the majority of palladium and is it rhodium too?
Yeah, I think it's
South,
palladium. Yeah, I think platinum is more in Africa, but again, I could be way off on that part.
no,
But
you're
yeah,
right. No, it's
yeah,
right. The majority of platinum is South Africa, majority palladium's Russia, and I don't know about
Kazakhstan.
rhodium.
Yeah, no, me neither. Me neither. So
Yeah, rhodium might be South Africa. I can't remember
yeah,
which one it is.
yeah.
Yes. So anything else you'd like to share or anything else that you'd want to end on or end with?
Look at the gold miners compared to gold. I think it's the beginning of looking back a few years. I think people will say, yeah, that was the time we had to buy. Yeah, I think that's where we are.
Yeah, I think everything looks ridiculously good across everything, commodity wise. Everything looks good to me. So are we at the beginning of a very big move for all of them, you think?
Yeah, I think so. Yeah, and each will take its turn, of course, but it's also, again, of course, it's supply and demand, but it's also because the fiat, the paper that you have is getting diluted heavily every single day. All, fiat, whether it being the euro, the USD, you name it, they're being, diluted heavily at this moment in time. So they are just pushing so much, they might not say it, but that's clearly what they're doing. So much, extra money and capital into the system, and that of course will make prices go higher in basically everything because you're diluting the original money you have. Therefore, prices will also go up from that point of view, and that will happen over the next 10 years also. So we will be in a very high stagflation environment, and that is where gold, silver, especially silver, strives big time. So
All
so
right.
yeah.
So we'll end it there. Um, thanks for viewing, everybody. If they want to follow you, Casper, how do they do so?
Yeah, thank you. It's of course on Twitter or X at UselinkINV as always, and also on Substack, which we started 1.5 years ago, and that is basically where we try to pick miners like Abra and SUP, like we just looked at, getting those entries. Again, we won't be correct all the time, but but we're trying to manage the entries, the stop loss, and potential targets down the road. And yeah, that's basically where most of the stuff is done. At least the more detailed stuff is done. Twitter is more for broad markets updates and weird ratios like that we looked at here. So
Yep. Okay, guys. Thanks for viewing. Put Go Casper Go in the comment section, and we'll see you next time. See you guys.
bye.